October 2025. A stock that once promised unimaginable wealth now trades for less than a penny. A company that claimed it would revolutionize the electric vehicle market is delisted. Billions of dollars have vanished. Life savings evaporated. And at the top of it all, one man continues to collect millions. This is the story of Mullen Automotive, the zombie car company that refused to die, even while destroying the dreams and finances of thousands of ordinary investors. The collapse is stark. The company's stock is almost worthless. Factories that were promised existed mostly on paper. Lawsuits are piling up in courtrooms across the country. Investors, many of them retirees and families who had put their entire savings into Mullen, are left holding nothing. The ticker symbol, MULN, trades for under half a cent, a far cry from its peak just a few years earlier. Mullen promised electric SUVs, luxury cars, and revolutionary battery technology. By 2025, most of these vehicles existed only in press releases. Factories were often showrooms rather than production lines. Money disappeared quickly, spent on hype, press announcements, and endless stock maneuvers designed to keep the illusion alive. The company continued to survive, not because of profits, but because of a carefully maintained image. Reverse stock splits and other tricks kept it technically alive, often trading off the major exchanges. The real story is not survival. The story is about who profited while everyone else lost everything. At the center of it all is David Michery, the CEO and president. Even as the company's losses mounted, Michery's pay did not decrease. Millions in stock awards and bonuses flowed to him, while the company burned cash and investors suffered. His compensation was among the highest in the auto industry, far above executives at companies producing real, profitable vehicles. Imagine a CEO collecting millions while the company hemorrhages value, and ordinary investors watch helplessly as their savings vanish. Mullen was constantly in the news, not for production or sales, but for announcements of partnerships, battery breakthroughs, and huge deals. Every press release promised something revolutionary, but behind the flashy headlines, almost nothing happened. Factories produced little to nothing. Vehicles remained conceptual. Battery technologies and other innovations were often just ideas, never tested or brought to market. Partnerships fell apart or proved far smaller than announced. Investors, many of them ordinary people putting their retirement funds, college savings, and life savings into Mullen, began to fight back. They filed class action lawsuits, claiming the company made false and misleading statements, exaggerated partnerships and technology claims, and hid the real risks from the public. These filings were not just legal documents, they were desperate cries from people whose entire financial lives were evaporating before their eyes. Mullen's stock refused to die, behaving like a zombie. Reverse stock splits reduced the number of shares, but these moves did nothing to create real value. Each split was presented as the solution to save the stock, yet the stock continued its downward slide. Delisting from the major exchange was inevitable. The company issued new shares to raise capital, diluting the value of existing shares. Everyday investors watched as their ownership and investments shrank, powerless to stop it. Mullen's story became a tragedy, not just of financial loss, but of ordinary people losing almost everything they had invested. Many saw their investments drop by 90% or more. The human cost was staggering. Ordinary families, retirees, and young professionals lost their savings. People invested money for college, for retirement, for life milestones, and it vanished. Across social media, forums, and petitions, investors told their stories of loss. One investor said, "I put everything into MULN, my retirement, my kids' tuition, and now I wake up every day hoping it bounces back. But the more time goes on, the less I recognize what I invested in." These were real families, not hedge funds, people who trusted promises and hype, and they paid the price. Even as the stock continued to collapse, Michery publicly blamed outside forces, market manipulation, short selling, and unfair trading. Critics saw this as deflection. Lawsuits alleged that he and the board understated risks, misled investors, and failed to disclose material information while taking massive compensation for themselves. The company's own books told a different story. Money burned faster than any revenue could come in. Losses dwarfed earnings. Promises remained unfulfilled. By late 2025, MULN was delisted from NASDAQ. The company rebranded and continued trading over the counter, surviving only through dilution, hype, and endless corporate tricks. A small settlement was reached with investors over misleading claims, but it barely covered the reported losses. For most investors, it was too little, too late. The story of Mullen Automotive is a warning. It is a story of hype over substance, of charismatic leadership unaccountable to results. Mullen's saga also illustrates a wider problem in modern investing. Ordinary people are drawn in by the excitement of disruption and innovation. They see press releases, bold claims, and stock surges, and they believe in the vision. They ignore the warnings. They trust the CEO. In this case, their trust was exploited. While David Michery profited, countless investors lost the future they were planning for. The company's technology breakthroughs were always a step behind reality. Every battery claim, every partnership, and every production milestone was delayed or exaggerated. They built hype, not cars. They sold hope, not vehicles. The few cars that were produced rarely reached customers. And even when they did, they often faced quality issues or never met the standards promised. Even when investors began asking questions, the response was the same: optimism, promises of coming breakthroughs, and more announcements of partnerships that never existed. The illusion was carefully maintained. Each announcement was like fuel thrown onto a dying fire, keeping the company alive on paper while reality crumbled. Retail investors were the most affected. They invested money they could not afford to lose. Some emptied retirement accounts. Some borrowed against homes. Many young families thought they had found an opportunity to build wealth quickly, inspired by visions of a company that could compete with Tesla or General Motors in the EV market. They found themselves holding nearly worthless stock. Meanwhile, Michery continued to benefit. His bonuses and stock options were paid even as losses piled up. He was celebrated in company announcements as a visionary, a leader who would guide the company to success, even though his leadership left investors bankrupt. Critics argue that without his decisions, the company would have collapsed sooner. But for Michery, the delays and hype were profitable. The lawsuits highlighted the deceit. Investors allege the company misrepresented production capabilities, technological development, and the value of partnerships. They claimed that Michery and other executives actively misled shareholders. Some cases pointed to the timing of stock sales and insider trades as proof that the executives prioritized their own gains over the company's survival or the well-being of their investors. By the time MULN finally lost its NASDAQ listing, the human damage was done. Investors who had believed in the promise were left with little more than memories of what might have been. Some faced financial ruin. Others faced years of stress and anxiety over lost savings. The company, however, continued to exist in name, trading over the counter, barely alive, but still controlled by those who had benefited most. This story is more than just a business failure. It is a lesson in trust, greed, and deception. It shows how a single charismatic leader can manipulate perception and maintain an illusion, even as reality collapses. It also serves as a warning to investors. Always look beyond the headlines. Question promises, and understand the difference between hype and substance. Mullen Automotive's legacy will not be the cars it built, because there were almost none. It will not be the technology it promised, because it never delivered. Its legacy will be the human cost, the lives disrupted, the savings lost, the families affected, and the story of a CEO who profited while the world around him burned. In the end, Mullen's story is a cautionary tale. It reminds us that not all that glitters is gold. It warns about the dangers of blind faith in leaders and the consequences of chasing dreams without scrutiny. It shows the human side of corporate greed, the ordinary people who pay the price, while executives reap the rewards. If you want to learn more about the hidden truths behind companies that seem too good to be true and how ordinary people can protect themselves from corporate fraud, subscribe now and stay informed. The next corporate disaster could be closer than you think.